Alrighty, good morning for everyone in AEST. Good evening to everyone else. Well, not everyone else, but anyone in the EST and coming up in whatever time frame you're in. Good morning, good evening, good afternoon, all that good stuff. Hope you're having a great day and a great start to your trading day. Um, or and to it, however you want to look at it. We're excited to be here with SPDas standing by for covering the Sydney Tokyo overlap for January 21st. And of course, that's a continuation from this morning and from since January 1st, where we've been going live for you, giving you the Elliot wave theory trading on the major currencies, the dollar index, Dow, and of course the cryptos. That is accompanied by IT Trader's smart money analysis, looking at ICT, inner circle trader theory, institutional style uh, trading, looking for the footprints that institutions leave on the charts so that we can find the quote unquote elephant in the room prior to making our trading decisions. And of course, here at ForexLens, our mission is to give you that combined market narrative from multiple trading styles, mixing the classical with the neo, and also apply the artificial intelligence aspect on top of that. Um, we're looking at adding our GAN trader starting soon. So looking at more things like GAN cycles and timing. These are very important. We also have a crypto trader standing by. Of course, we want to make sure that our platform is ready so that everyone gets the best experience. So the architecture is very much complete, and we are integrating things as we speak. Also talking to potential investors and partners. We're super excited that things are coming together. And with that, I'm just going to pass over the microphone to SPDas and let's get this session started. SPDas, we're ready to rock and roll. The trading floor is yours.
All right. Thank you again, Igor, and welcome back, everyone. And let's get started off with the Tokyo Sydney overlap for the 21st of Jan or maybe 20th of Jan around the Eastern time zone. Uh, we'd like to start as usual the daily counts and if you look at okay, we'll get to it on in just a moment. Let me do the wave counts first. I'll bring up the candlestick chart as well. That's what I want to show. Normally, I use the bar charts for picking up. It 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 makes life easier to identify highs and lows properly and label them. But the candlestick charts, they give confirm signals, right? Okay, we got three-wave corrective decline. it's quite a double season going here. So viral infections are on peak. Okay, so three things are confirming. We've got the five wave in the larger direction. Number one, the, that means the larger degree trend is up, which is followed by a complex correction A B C, and it has point number three. It has bounced right from the Fibonacci 61.8%. All right, so keeping these three facts in mind, the overall trend, if you look at going forward, it should be something like this. Ideally, this is what we are looking for. Ideally, this is what the path that the markets are telling that they would be inclined to take for. All right, now we are very close to taking out the first wave four of a lower degree. Uh, in fact, I would not be surprised at all to see prices rallying all the way towards 1.06. Remember, that's the second Fibonacci target for us. You know what? If we were to believe the past historic price action, specifically how wave threes unfold, then it's interesting because it might not go straight up there. There is one more breather the market is expected to take, and if we get that breather, then the next step is going to be amazingly powerful and on the upside. So let's say we are expecting the third wave like this and fourth and fifth, okay? And I'm going to change the degree as well very soon, very quickly. Sorry, that is minute. You know what? But that first resistance is coming just around. It's almost taken actually at 1.0440. Correct? It's almost taken that out. But I still feel that if you look at the counts from that particular low, that is yesterday these times, Tokyo Sydney overlap, we got waves one, two, and three, and there is a potential triangle which is unfolding right now. Yeah, that is wave A, B. Then we'll have maybe wave C. So it could be an expanded flat or a triangle. We'll come to know which pattern is unfolding right now. One more leg lower, not below that low, somewhere here, and if it is an expanded flat, we will see prices rallying right from there. If it is a triangle, then it will take two more waves. So it will bring us to the maybe during the New York Open or New York session, it will be more clear. So it's a lower degree wave four in the process, and then wave five up there. So that would be the first wave of the third wave. So if I were to explain how it's expected to unfold, remember the fractal nature, the father and son and grandson, right? So it's expected to unfold that wave three into brackets is expected to unfold like this ideally. One more high, and then a corrective decline, and then three, four, and five. So just imagine this bracket three is going to subdivide into five waves or five larger waves like this. So I'm going to take that wave three there. All right. This is what ideally should happen. And I think that this wave will be more extended actually. All right. So if this is going to happen, if the trajectory is going to take place like that, then euro uh, is going to go fiercely faster than what we think it's going to do. Okay, so be prepared for one more opportunity. We are going to see one more opportunity. It's good for us actually, and that particular point is a good trading opportunity for those who have missed the bus or missed the trades completely. So the next entry, trading point of view. That's why I'm taking some time to explain the story. Point 1.035060 is the next entry point for, for bulls actually, and let's see if it is matching up with the near-term trend line as well. Ideally, it should match up. Yeah, there you go. Ideally, it should match up. So maybe around this zone, 40 or 50, uh, and that would be another. It would be one of the best pickups actually. That's a very strong signal when we do the theory sessions. We've got, just to remind you, when we start doing theory, we've got around 80 hours of education, basic and the Elliot wave principle combined. So we will discuss in detail what the trading zones are and what's the significance of coming and back testing the trend lines. So keep an eye on that particular zone next. Otherwise, the stop loss for now is okay. We are very close to revising the stop loss. We will be break even uh, in the next cycle. All right, and the targets are 450, which is already achieved, 600, the next one, and believe it or not, we are just beginning to cut loose on the north side. All right, so that is the story. And one more thing, one more interesting thing, if you want to notice, I keep on saying wave five is accompanied by a diverging scenario, correct? So look at that. That peak is the wave three peak over here. And now wave 4 is being worked on. It could be an expanded flat or a triangle. And you see that other side dripping lower. Maybe it can drip lower towards 60 or even 40 mark as the pattern unfolds. And then when the thrust wave begins, price action will go higher, but we'll again observe this RSI. It will hold itself behind the previous high. Let's see exactly something like this. That's a diverging scenario. Something like this could happen in the next few hours. So the fifth wave, when you combine it with the RSI, it is a very powerful combination of finding a trade. Okay, so dollar index now. Uh, it's a clear expanded. It's either an expanded flat or a triangle. I mean, the patterns when enough time has been spent, the patterns begin to unfold and they pop up to your eyes like a football. It's amazing actually. Okay, so it's when we can call ourselves to be more spatial, SPATIAL it is, spatially intelligent, when we are able to see more as a chartist than what normally it appears. That's when the story is properly, or we begin to understand the story properly. I don't know if you would believe, but there is always a divine force which is working behind everything that we are doing. Okay, so I always keep doing discounts again and again and over and again because this is what is the basic. If we are through with this part, then it makes life very easy and simple going forward. Like maybe we can draw the path for the next several months together. All right. So the next the next trade opportunity for gold, ideally, that is wave one, two. We are still working on wave three. We'll have one more low. Ideally, we should have one more low. That is one of three possibly if the third wave is extending, and we'll get two of three somewhere here around 108.60. That will be the next opportunity before the steep decline. So trading point of view, look, we'll please don't rush into the price action. That's the uh, one of the most common mistake which and I've done myself numerous number of times as well. But that was a learning process. It's the price that every trader pays. But if you're watching these sessions, you are going to save quite a bit of time and energy. So next entrance would be around 108.70, and the stop loss ideally would go above that point, but I suggest to keep it here for now. For those who have already entered, we'll revise the stop loss after the turn. All right. So let's be patient for a while. So dollar index on the short side, please. Surprisingly, uh, gold is uh, is holding up. It is holding up in a sense that it's a triangle combination working around right now. So we still have to keep our options open for that ABC, where B could be an expanded flat as well. All right, because it's surprisingly holding up, and the pattern is unfolding as a triangle on the shorter time frames. But the medium term picture for gold is that we are still looking for an ABC decline, possibly at least towards 2500. Ideally, it will be around 2450 to be more precise. But then gold has still one more upside left thereafter. All right, and this wave B, I don't know if we can. Let's find out if there is an impulse. No, that is not an impulse. The only thing is if that five and wave two, and then that is where one of three and two of three. Only in that case, it's going to fiercely reverse logo from here. So, if prices fail to push above 2717, okay, if prices fail to push above 2717, then it's going to be the third of third wave already for gold, and that drop would be very very powerful, or it should be very powerful. So 2717 short term, you might want to remind yourself. Trading point of view, right now we can enter short, stop loss around 2755 ideally. We are expecting uh, it to be a standard flat right now. In case of an expanded flat, the stop loss would go, I would suggest about 2800. But that's not something we are looking for right now. We already entered the trade with a stop around 2755. And the shorts have been already entered around the 60, 70, 26, 60, 70 zone. It's a good price if you are watching it right now and if you want to enter at this price. All right. A quick view on the Dow futures. That was expected. We are quickly reaching the 61.8% mark. So I would not be surprised. We are almost there now. So our shorts have been triggered already, and that is the zone 43, 700, 800, uh, and 44,000, which we will be targeting. All right, and don't forget, please, that's wave one at a minute degree, uh, wave two, and three, four, and five to come. So again, the degree here is minute. The target is around 37,000. To remind again, the stop loss is around 40. What 40? 40. It's 45,000, right? So 46,000. 45,300 is the peak. So let's stay away from the noise. Around 46,000. And so if you talk about the risk, it's less than what 44,000, correct? Uh, 43,700, so 44 and 45,000. So 2% of the value, almost 2.5% of the value. And the potential target that the reward that we are expecting is around 37, which is 10% of the value. So it's almost 1 is to 5 risk reward ratio, and that's a good deal by any means. I'm talking about the risk reward ratio with respect to the price value of the instrument here. All right. So we will touch base in the New York session in the details. Price action is almost silent right now. And let's watch what Bitcoin has done. So, okay, Bitcoin has reversed now, and then that was quite a bit normal expectancy. Uh, you know what? Bitcoin has peaked or might have peaked just ahead of uh, 1 125 and 115. It is quite possible. I'm not saying it is done yet. It could not have, it might be working on a wave four, but the way it has drawn lower, it could possibly be a potential peak as well. It's not confirmed yet. The confirmation will come on a break below 90.99. But tell you what, it could also be an expanded flat in the making. Okay, it could be wave one, and sorry, yeah, this pattern could be, we are on the hourly chart, correct? So that could be wave one, expanded flat wave two, or this entire portion could be a triangle wave four in the making. So it could be A, B, C, D, and E. That is a triangle. And if it is a triangle complete here around 100, then the price will rally or begin to rally from here itself and push towards and try to push towards uh, 115 and 125 later on. So ideally, the stop loss, if you are wanting to take a good tight risk reward ratio trade, ideally you put the stop loss, you can place around 99 or just below 99. And if we go long right now, let's check the RSI because we need to be very careful here. Okay, the RSI is hovering around the 39.40 mark, which could be potential wave 4 as well. All right, I like this setup here. So let's take, and if you are wanting to take a tight risk reward ratio deal, enter longs right now, stop below 99, just below 99, and target 115 and 125, please. All right, that could be, this could be a tight, I mean, 2000 versus 13,000 and 23,000 risk reward ratio. So that's still 1 is to 5, larger than 1 is to 5. Ethereum was a good deal we picked up last time, but let's see how the price are. It's this is a triangle. It goes without saying, and I think it's done the fifth wave. Normally, second waves are not triangles, but this one has been. Okay, so if you have not yet done, if you still want to do Ethereum, it can be done right now as well. We're back around 3200, stop around 2900. That pattern is a triangle. 3, 3, 3, 3, and 3. Okay, so I mean, if you look at the hourly chart, it will be more clear. You see that five? Okay, that's a five-wave decline. So it's not a that's an expanded flat A, B, and C, and from here we need to start counting. So that's wave one and wave two. It's still it's still dicey over here, but the pattern is still not clear. It might be a triangle in the making. We need to keep our stop loss around 29, and the target goes around 4300. We need to be a bit careful because if that is the first impulse wave which is being retraced, we've got to be our stop loss ideally should be below 3100. So don't from 29, please move our stop loss to 31. Repeat, sir, from 29, we move our stop loss to 31. We need to be tighter stops and potential target around 43,000. Remember, Solana is ruled out, Bitcoin is potentially ruled out. We are just taking a good risk reward ratio trade. Ethereum, we've just discussed, and Ripple, we'll have a look quickly. Yeah, Solana is also doing the same thing. If you want to take a good risk reward trade, maybe I would still recommend please stay away from Solana because I've got divergence on the chart. We've seen divergence on the chart, and there you see the divergence. The peak here and the next peak here. The RSI is quite lower. Even if it pushes one more, I mean, we don't rule out another high, but considering the risk reward ratio, if if you can place your stop just below 229, then it would be a good deal, otherwise not. And finally, if we look at Ripple, okay, I believe in this story what Ripple is telling us. That could be wave one of lower degree and wave two of lower degree. So even now, with the last leg around 3.7, with the target of around 3.7, if you enter right now with a very tight stop just below 2.8, all right, that gives us a 3 points of risk and 5 points or 6 points of reward, 7 points of reward. That's still a good risk reward ratio. If you put an extension or try an extension here of lower degree wave 1, just a moment. We got 3.7 as was target. That's enough for us. All right. That's the near-term, short-term trade setup. But please remember, we are into the last leg higher, possibly among all three potential trades. So be very careful and be very tight with the stop loss if you're dealing with them right now. All right. So with that, we are back to the end of the session. Let's bring it a pause here. But once again, thank you everyone for tuning in. We'll be back again in a few hours during London times. And back to you, Igor. Thank you for the time.
Amazing. Thank you very much, SPDas, as always. Very humbled
Yeah.
by your knowledge and amazing analysis. So
Thank you
thanks
very
again.
much.
Appreciate it. Alrighty, folks. Thanks for tuning in. We'll be back for London session at 5 a.m. Also with SPDas, followed by the 8 a.m. New York with IT Trader. Looking forward to seeing you there. If you're watching this and you're not following us on X, please do so at ForexLens. If you're watching this on X and you haven't liked this video, please like it. We would appreciate it. Please share it with your trader friends or communities. Anyways, it's been a blast as always, and see you tomorrow. Take care.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.